Hello. Today is Saturday, June 22nd, 2024. I'm Jason Shapiro with Crowded Market Report. Today I wanted to discuss a topic that I think is probably the single most important thing that people need to be trying to figure out when they're trying to figure out how to make money trading, and is, for whatever reason, I feel like the least understood and the least paid attention to thing. And that is the discounting method in the markets. The market is a discounting mechanism, which in theory means that all known information is in the price of an asset. Okay. So if you're going to try and make money, you using information that you have, it's either got to be inside information, which you probably should not use because it's illegal. Or it's got to be information that other people don't know somehow, which is very difficult if it's not inside information, because all that other information is discounted in. And I think one of the best ways that I try to explain this is if you think about betting on a sports event, let's say a football game, and you have two teams, and one team is much better than the other team, and everybody knows that. Well, knowing who's going to win that game gives you no advantage whatsoever. Okay. Because there's a point spread. The point spread is the discounting mechanism. You have to be able to make the prediction on who's going to win or lose that game relative to the point spread. And all the known information about this upcoming game is discounted into that point spread. So how do we figure out what's discounted in? Well, I think the error that people make is they use price as a discounting mechanism. This thing has gone up a lot. Therefore, good news is discounted in. This is a problem because we don't know if price has discounted anything in. People thought that, NVIDIA went from 300 to 1200. Well, people thought all the good news was discounted at 400, 500, 600, 800, 900, all the way up. And as it turns out, it wasn't, right? What I believe is the best way to measure the discounting mechanism is positioning, which means have people piled into this trade and therefore stuff is discounted in, right? And it's a question of looking at positioning and combining that with listening and reading to what the analysts are saying to figure out what's being discounted in, because the analysts don't like to use this discounting mechanism. They just like to use the fact. They like to be right about their call. And I think the best way to explain this right now is in the Canadian dollar as an example. So this is the positioning chart for the Canadian dollar. And this blue line are the speculators. This is the shortest speculators have ever been in the Canadian dollar. So arguably, they're discounting in a hell of a lot of bad news. And what we're also seeing now in the last week or two is a lot of these macro geniuses coming out and talking about how bad the Canadian economy is, which means that they're going to keep lowering rates, which is theoretically bearish the Canadian dollar. I get that. Okay. And I'm not saying it's not going to happen, right? Just because they're saying it doesn't mean that the Canadian currency won't weaken. Doesn't mean that the Canadian economy won't weaken. It means from a risk reward standpoint on a trade based on what's discounted in, the downside becomes very limited compared to the upside. What if the Canadian economy is not as bad as people think? Well, then the upside is huge because people are going to have to get out of this bearish trade. And there's a huge amount of people that are in it. And that could cause a big squeeze. Now, if the Canadian dollar continues to go down, okay, then there's going to be some downside and you lose a little bit of money. But from a risk reward standpoint, right, your upside is so much more than your downside because of this discounting mechanism, right? Another good example, this was at the beginning of last year where we had every single pundit talking about the coming recession in the U.S. And therefore, the stock market was going to go down. And we had positioning where people were very, very short the stock market. And what happened? We never got that recession. And the stock market hasn't looked back. It's essentially gone straight up since the beginning of last year, right? Now, did we know that there wasn't going to be a recession? No. But we know that a huge recession was already discounted in. So the risk reward going to the other side was much, much greater. And that's proved out, right? So that's really what you have to think about. What is discounted in and how to measure that? And to me, the best way to measure that is one, look at positioning, because that shows you where people are positioned and discounting in the news. And two, listen and read to what the macro pundits are saying about this. Are they agreeing with this positioning? In this case, in the Canadian dollar, they certainly are. Everybody's bearish the Canadian economy right now. And you have to remember, these people just want to be right about that. They want to be able to say, hey, look, the Canadian currency or the Canadian economy was weak. And I told you it was going to be weak. Who cares? I'm not trading the Canadian economy. I'm trading the Canadian dollar, right? And I hear them say that all the time. Well, I was wrong about the market, but I was right about the underlying fundamental. Who cares, right? Do you want to be right or do you want to make money, right? We want to make money, clearly, as traders. And this is the best way to try to measure where the best risk reward is, because that is what trading is. People want it to be about predicting where the market's going to go or having somebody tell them what the prediction is, where the market's going to go, right? It's not about that, right? It's about getting into something where if it works, you make, 10. And if it doesn't work, you lose 1 and getting in those again and again and again. And I feel very strongly, and it's proven out, that this positioning and this sentiment is the best way to figure that out. Okay. So those are my thoughts for the day. I think it's extremely important. And I hope you enjoyed it. And please like the video if you did. Please check out our Substack, which is free. Please check us out on crowdedmarketreport.com. And I hope everybody has a good weekend, and we'll talk again next week. Thanks.